Hey everybody, I'm Gary Palmer Jr., you're you, and together we are minting coins. Just wanted to do a quick video. I know I've been MIA for a little bit. I've been super busy doing what I do best. Unlike a lot of crypto YouTubers out there, I still maintain a day job and provide some pretty high-level services for marketing and business and technology and strategy for corporations, you could say. And I have a lot of experience in digital payments and web marketing and technology, and I have a particular set of skills of understanding really complex information and breaking it down to create systems. And with the systems that I create, I make a lot of people a lot of money, and I've spent my whole life making a lot of people a lot of money, making literally millions of dollars for small businesses and international corporations. And with those services that I've been providing my whole life, I never provided those services for myself. I never built something for myself. I never created something that was a hard asset for myself. I own some assets, but I never did for myself what I've done for other people. And that has really left me behind, left me at a disadvantage where I, to this day continue to need to provide services for other people every month in order to, keep food on the table. Haven't gone crypto rich yet. So with that, and the skills that I have that I do day to day, it's very closely related, marketing, business, and technology with Bitcoin and blockchain. And as you know, I'm head over heels in love with blockchain, and I've taken my skills of understanding systems and processes and nuance, and I'm doing that now for a lot of people locally, a lot of people online through minting coins, and with that, I am deeply committed to minting coins for myself, with you guys, with other people, helping people understand what is happening with Bitcoin, what is happening with blockchain, and helping people to understand what is happening in our world that we're living in right now. And one of the main things that I wanted to bring up today and talk about was how over the past 100 years we've lived in this society, this debt-based society. We learn about money, we're asking what money is, and a lot of us are learning what derivatives are. And we live in this world where derivatives have higher values for money and value and wealth than actual money, than hard assets, than hard money does. And we went through a horrible experience in 2008 with the financial crash, the financial crisis, and through that came the equal but opposite reaction, and that came in the form of Bitcoin and the Bitcoin blockchain. And 2008, there was the white paper, January 3rd, I believe, 2009, and Bitcoin was born, very clearly pointing out that the chancellor on the brink of a second bailout in Europe. And so this is going to happen again. Everyone knows markets come, markets go. These are cycles of boom and bust. And the reason that they're cycles of boom and bust is because these cycles are based on debt. These cycles are based on how much people owe, how much they don't owe, people, corporations, sovereign governments, how much revenue they have, what is their debt to revenue ratio, what is their revenue that they're bringing in, reoccurring, what are the services revenue that they're bringing in, what are the products and service revenue that they're bringing in, and then how does that compare with how much debt they have. And so when these markets are done being at all-time highs, and when the markets start coming down, and when the shoe starts to drop, and a lot of this debt needs to start getting paid off, and the debt, as normal people know who get themselves into debt, the debt becomes so unbearable that it's just too much to take. And then we're going to see recoils and retractions in the market. It's going to be a very bad time for inflation, for interest rates, for debt, for paying back that debt, for employment, and a lot of people are instilling a lot of fear and a lot of warning that this could become a really, really bad situation. And what I'm starting to recognize more and more and more is that this could be, minus the world coming together, all the central banks around the world coming together, including the central banks of the United States, of Europe, of China, of Russia, all coming together with this massive world bailout that would dwarf the TARP bailout and other bailouts around the world in 2010, minus that happening, there needs to be some sort of major change in the economic system moving forward if and when this major correction comes. Now, a lot of you guys may know that today is, a very special day, and today is the 30-year anniversary of the Economist magazine that predicted digital currency and digital money, 30 years in the future. Well, here we are, 30 years later, October, 2018, and we are watching Bitcoin. We are looking at the number of users, the number of addresses on the Bitcoin blockchain that have between 1,000 and 10,000 Bitcoin, and the number of large addresses holding large amounts of Bitcoin has been increasing significantly over the past 7 days. So alongside with that, what we're trying to get to is that we're going to be shifting from this massive debt-based economy to an asset-based economy. And this is going to strike governments all the way down to public sectors, right? And so right now governments have all these debts, corporations have all these debts, and what's going to happen is that we're going to move forward with tokenization of corporations, tokenization of property, tokenization of public works even. It could be tokenization of the road system, and then all of this tokenization of real world assets is going to be the future value, the future wealth of real things moving forward. People are going to come to realize that this printing money out of thin air, this money backed by nothing, this fiat money that we have all around the world is going to pale in comparison to Bitcoin and to gold and to silver and to these digital cryptocurrencies that are going to become extremely prevalent. There's going to be public cryptos and public tokens. There's going to be private cryptos and private tokens. And it's in some way, we're going to see all of NASDAQ, all the New York Stock Exchange, all of these stock exchange bonds, financial instruments that are going to be tokenized. They're going to be turned into crypto securities. And then with that, we will be moving into this asset-based economy, this new asset-based world. And thinking about that, it's what we've always known is that debt is not where the real value is. In Wall Street, debt is rewarded. In Wall Street, debt creates value, because they get to sell that debt and trade that debt and turn that debt into this market. But once the house of cards comes crumbling down and people realize that you can't create money, put an interest rate on it, and then have enough money in the world to pay it all back, something major is going to have to change. There's going to have to be a major shift in world economic monetary policy, the way that global financial systems work, and a debt-based system is no longer going to fly once the market corrects and once tokenization and crypto securities really go mainstream. And we don't know if this is going to be in 30 days or if this is going to be in 3 years. But we feel relatively certain that there are going to be some major moves in the next 18 months before May 23rd, 2020, just 18 months away when we have the next Bitcoin halving. So with that being said, I'd love to know, what do you think about this current debt-based economy, this debt-based global system that we currently operate in versus us moving into this asset-based, right? Virtual assets, digital assets, real-world physical assets, everything from cars and property and real-world assets to, even, you may hate me for saying it, but CryptoKitties and Decentraland and these digital, tokens on the blockchain, which, will have value and in a lot of cases will be useful. Some of these digital tokens, not to go on a tangent here, but they're going to be valuable because they're going to be rare, and other digital tokens are going to be valuable not only because they're rare, but because they're going to be having the ability, the option to generate new income, right? Sort of like what Decentraland is doing with their game system, and how you can own the land asset, but then you can rent out the service to a developer later. The same thing is going to be true with the physical property, because this is where real people really live. But it's going to be about actual ownership, not just revenue. It's going to be about actual ownership, not just debt. It's going to be about actual ownership, not the income to debt ratio. It's going to be about actual ownership. And the way this is going to be facilitated is through the coming down of the current financial system, and then the propping up of this new asset-based system with tokenization and blockchain technology. So with all that being said, let me know what you think about all that. I'm really happy that I can be sharing this information with you. I'm really happy that we can take advantage of this information now because we're early, and we can take this information, we can share it with other people. And by more of us having this information now, then more of us can be together moving in a positive direction. And then more of us together, we could be minting coins.